Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Write down that phone number. When you get questions or have comments about what we're doing, give us a call and leave me a message. I'd like to hear from you in person. I'd like to hear from everybody who has a comment or listens to the show each and every week. We try to get feedback in order to produce a better show, in order to see what out there is of question. One of the things that we talked about on last week's show was some of the different types of loan programs. One of the loan programs we talked about was obviously the non-QM stuff, bank statement programs. Those particular programs are really popular right now, and they're really popular for a number of different reasons. One of the reasons that they're really popular is the fact that those loan programs in the non-QM bank statement programs per se are for people obviously who own their own business, people who are working for a living by themselves for themselves. I happen to work for a company that's like that. Malibu Funding, producer of the show, people who spend money on me each and every week to bring to you this information. They're run like that, owner-operated kind of company, so that when you're out there and you're trying to figure out how much money you make each year, and then how much of that money do you have to declare, and then based on that declaration, is that the only way you can get a loan? I.e., we all know about the conforming Fannie Mae, Freddie Mac type loans, which, again, they have their constraints. It's good because what you do is you get a very qualified loan, meaning that it is insured and you have the best possible rates available in the marketplace, depending on, of course, your own credit score and such. But normally a QM loan, which is sold to Fannie and Freddie, are the safest loans in the market, safe for the investor and good for you because they are better and most competitive. I have an article here written by Jan Swanson over at Mortgage News Daily that talks about how the loan limit has increased. Now, when you talk conforming loans, what are we talking about here? We're talking about loans that are made up to a certain dollar amount, and if you come in with a certain percentage, there's no mortgage insurance. Well, that loan limit was increased to $510,400, which is maybe not in your particular area, in San Bernardino and Riverside. Hello to everybody out there. I want to say hi again, always grateful that you listen. But in certain areas, certainly in those two terrific places to live, 510 gets you in the door, meaning that you don't have to bring. If you come to the conforming limits, your rates are going to be lower. That's just the way it is, especially, as I said, if your credit score is good and you bring in a certain percentage. Even, I believe, up to 95% you can get a loan on in this conforming space, which means that obviously it's cheap to get into the property. But 510, that really covers a lot of those particular counties, a lot of the towns and cities within them. There are a lot of properties for that amount of money. I know that when we talk to our people who live and work out in those counties, and what they're telling us is that homes that have already been bought and sold several times, and new homes, you can get them for under $500,000. Not a lot under, and especially bigger, nicer homes in good areas, school systems as well. But that $510,400 limit is going to include a lot more people in the better rates, and I think it'll allow some newer people to get into the marketplace. Now, obviously, with that dollar figure that's been raised to, loans that come in under that, well, sure, anything up along the corridor, anything down. I spent some time in Temecula recently, great city down in San Diego County. But it's down the 15, and there's that corridor between the 10 and all the way down to, I guess it's in the Temecula area. I don't know much about how further down it goes, probably all the way to the border. But there's a great deal of new housing out there, a great deal of housing that is in the $300,000 to $400,000 range. Now, if you don't live and work down there, it's still an option for you because, as I said, there are great great deal of properties being built currently, which match in that conforming limit for what you're talking about with loans and affordability if you're in the $300,000-$400,000 range. What we've seen, however, which may be a little bit contrary to what I'm trying to tell you, is that the housing inventories have gone down, and they've gone down by a number that is, let's see, at the end of October, inventory nationwide fell to 3.9% month supply. Now, what we usually try to get to is about 6 months supply, and we've told you many times in the show that that means at 6 months supply of housing, you have an equal number of sellers, equal number of buyers. It's the best market for many reasons. It's maybe the most stress for both buyer and seller because both end up not getting what they want. But this particular let's say 4 months supply, let's say if it's 4 months supply in your particular area, does lean a little bit towards the seller having an advantage, i.e. there are more buyers than there are sellers. And this has led and continues to lead to scarcity in properties, right? And also that the price point and the price that you want to pay goes up. In the article itself, it talks, and I'll read a little bit of it to you. Inventory end of October nationwide fell to 3.9%, according to the National Association of Realtors. Current sale price, it would take that long to sell all of the 1.77 million homes available for sale. So currently, the end of October, 1.7 million available for sale, and it would take about 4 months to sell them all. And they talk a little bit about, the same 6 month window that I was talking about, i.e. you want a 6 month supply because it's equal buyer, equal seller, and that's the fairest way to get a true reflection of the price in the marketplace. Now, in our marketplace, we've been really spoiled by low interest rates, artificially propped up by the lowering interest rate, the printing of money, all the things we talk about usually on each and every show, whether it's the Fed or whether it's the Treasury or whether it's how those particular entities get funded, how Fannie Mae and Freddie Mac get funded. All of this free money that's really been floating around, and we talked about 3 weeks ago on the show that what they call the phantom or the stealth QE that's going on out there, that the Fed and the Treasury are both buying mortgage-backed securities as well as treasuries themselves. And that's an artificial prop-up. Now, why have we done that, as well as coupling with the Fed funds rate dropping 3 times in the last 6 months? Keep the economy going. That's really how it's done. As long as there's money being printed and it's easily and readily accessible to most people who want to borrow, i.e. large financial institutions, they're going to turn around and lend it out to you because it's cheap for them. It's cheap for you now because these particular interest rates that we've gotten have led us to where we are. So what they're trying to do, and what is the consensus among some of the Fed board Fed board members, they're called governors, as you all know, there's 9 of them, is to try to come to a place whereby instead of having the interest rate dictate whether you can buy a house, it's going to be your income. Now, what do I mean by that? Well, if we have been artificially keeping interest rates at a certain level, that means that people who should be able to afford that house based on their income can probably afford something more expensive. Traditionally, if you make a certain amount of money, you can afford a certain type of house. That's the bias that they want to get to. Right now, we're looking at interest rates being able to make you, especially in the low end of the market, afford a house. $200,000 house, if it gets lowered by 0.5 point from 4 to 3.5%, that savings is great enough so that you can come into that property with a little down and you can afford the property. Now, is that a true reflection of the marketplace? Not really, but it is what's happening right now, and it is what you can take advantage of. In certain cities across the country, they talk about the difficulty of finding a home because of the low inventory. I'll just read off a few while we've got about 40 seconds left. In Las Vegas, the inventory is down 14% from where it was in 2018. In Seattle, it's down 28%. And that was a market that we were all saying, oh boy, big bubble, it's happening now. That's about a year ago. Well, now we see that didn't happen, and the And again, this is because the interest rates have been lowered artificially by the phantom quantitative easing and the Fed funds rate being reduced. All of these economic factors need to be taken into consideration, but I don't know when the reckoning is coming. I've said it's coming, but it hasn't come yet. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number over here. If you pick up the phone and leave me a message, I'll call you back with some of the best information that you're going to get in the mortgage industry about mortgage products, about what's happening in the marketplace, about a number of things that you may or may not know. Certainly home inspections, title companies, escrow, a lot of different things that you need to know when you buy or sell a house. And if you're looking for the best possible mortgage rates, you probably want to talk to a mortgage broker or a hybrid mortgage broker banker like Malibu Funding. Malibu Funding is the sponsor for the show. Each and every week they bring me to you, and I really appreciate what they do, so thanking them up front and out loud. We do bring to the show people who are both community and nationally inspired to bring us a better country and a better world. Ed Peiser's been on the show many times talking about those such things. He is, are you the owner or the CEO, Ed, of Organization for Social Media Safety?
I am Jeff, I'm the founder and the educational director.
Okay, excellent.
And, yeah.
All right, so let me just ask you, the Organization for Social Media Safety arose out of an incident that happened with your son, it must be, almost 2 years ago?
It's coming up on 3 years.
3 years.
Yeah.
Wow, can you just briefly describe what happened so that get people who have never heard this story, and then we can talk a little bit about how, you're helping improve the situation, reducing violence.
Of course,
Thanks.
Jeff. As always, thank you for having me.
Sure.
So, 3 years ago, December 2nd, 2016, Jordan was attacked, bullied, whatever word you want to put it, but he was sucker punched to the side of the head. Some coward came up behind him, knocked him out, knocked him unconscious. And Jordan suffered a TBI, traumatic brain injury from the assault, and was, spent 6 days in the ICU at Children's Hospital, Los Angeles. And what makes this entire event worse was the attack was filmed and then shared on social media.
Right.
Hence, the name of our organization, the Organization for Social Media Safety. It was filmed, it was recorded, it was shared, and then viewed thousands and thousands of times for entertainment purposes. And out of our mess came this message of social media safety, because our children all over the planet are walking around with these digital devices in their hands, viewing things, and no one's doing anything about it.
I think that what you're doing and what you're trying to do, educating people about the potential violence that can erupt based on, trying to get likes on your phone, is a real thing. Yep. It's not something you're making up. It's not science fiction. This really happened to your son. Tell us a little bit about the work you're doing with the...
So the nonprofit now, we are traveling across the United States. We're talking at schools from 5th grade up to high school age. We put a presentation on for about 50 minutes per period or per class. And we are, we start with what happened to Jordan, but then we get into social media motivated violence and cyberbullying and sexual harassment and sexting, things that are happening down to the age of 10 and 11.
Right.
The biggest thing I focus on right now is the fact that suicide rate amongst teens in our country has exponentially grown to a point where in 2018, suicide was the second cause of death amongst teens.
I did not know that.
We now see these correlations between cell phone use, smartphone use, and that statistic. So it's not a rare event anymore, and it's something that I want to change.
How do you change it? What do you do? I mean, obviously the statistics are frightening, but I'm an adult. I'm not really invested in this thing.
Right.
So what's
scary. It is frightening.
Right.
It is, the only way I think, and which is what we're trying to do, is education.
Right.
Because we are, as I tell these parents, I talk to school kids and then I talk to their parents afterwards. We're paying the bill. We're putting the phones in their hands and we're giving them these phones, and we're not really training them on how to use them or what to do if you see hate or violence. That's the component for me is how do you react or respond to what you see? Because if as I tell the kids, if you came home and someone's painted or spray painted a hateful message on your garage door, you'd immediately remove it.
Right.
You would wash it off, and then you'd probably call the police and say, "Look what happened." But if you see something on any one of the platforms, social media platforms, that is hatred-filled or racist or anti-this or anti-that, you just scroll past without doing anything. And it's creating a new feedback loop in their brain to when you see hate or when you see something like this, you got to remove it. You got to say something. You can't just scroll past, swipe it to the left, and move on. You can't do that. You can't click like if you see somebody getting their head bashed in.
Well, I think the nature of the way people, especially kids who are using their phone all the time, is that you get into a voyeuristic look at how the world is rather than involving yourself in how the world is. And that's the danger of these things. It's like you're separated from it. I can't tell you how many times I've almost hit people who are just walking in the street looking in their phone because they're not paying attention to what's happening right in front of them. It's amazing to me. When I realize
I walk around school campuses, I wear a shirt that says "Look Up."
Right.
And I'm going to look at the kids. Like, what does my shirt say? And they say, "Oh, it's "Look Up." I say, "Yeah, your head's down.
Right.
You need to look up. You need to pay attention." You almost walk through a crosswalk. I've seen it. I've seen kids. I've heard stories of kids getting hit by cars.
Right. Yeah, I have too. I mean, there's a commercial out right now about a guy and they talk about him in glowing terms, but because his head is down, the commercial was some kind of car safety commercial, but essentially exactly what you're saying was going to happen to this guy, and it's in a commercial. So this is real. This is like something that is part of, I guess, what we have to deal with. And in your education process, give me some of the bullet points that you talk about in your presentations.
The biggest themes are this: block and report. That's number one. If you see something on a social media platform, it is your responsibility as a human being, let alone good citizen, but it's your responsibility to block that from getting into your brain, from passively just seeping in, and then reporting it. Case in point, I just actually reported something. I saw an animal cruelty video that someone had posted on a platform, and I thought, why would they do that? And I reported it, because I would do the same thing if I saw someone, beating an animal outside in public. I'd report them.
Absolutely.
And the second thing is, to your point, is to be an upstander, not a bystander. We're all digital bystanders today.
Yep.
We're all watching this voyeuristic, and we need to be upstanders. If we see something, we need to stand with somebody and use our voice.
No, I think both of those things help. Does the message get through?
Yeah, and then most importantly, contact our organization. We'll come out to the schools where we go all over the U.S. now, and it's a great message we bring to the kids. It's a salient message. It gets through to them. Afterwards, I have kids come up to me and share their stories and how they feel isolated, but they don't know what to do because everybody else is doing it. They don't want to feel left out.
Right.
So it's really it's an epidemic.
Yep. I agree. I don't know what to do about it other than, I guess, what you're doing in your organization. Have you made alliances with other organizations doing similar things?
We're slowly making those alliances. We've got some good advocacy work going on with some bills we're passing.
Okay.
February 13th was declared Social Media Safety Day in Los Angeles, so that got some movement. We're working with some elected officials, some celebrities, some influencers, if you will, and we're just trying to create better habits for our children. It's really all about creating a habit.
Right.
Replacing a bad habit with a good habit. And teaching them, when we do our presentations and we talk about when you put a child in a car, you buckle the seatbelt. Well, the same thing, when you give them a phone and they get on the information superhighway, we need to buckle their seatbelt. We need to make sure they know what to do and they're safe and they know how to react if they get into an accident. And that's the same method on the phones.
How do people get in touch with you if they want to either get involved, donate, whatever you've got available?
Yeah. Well, obviously they could go to OFSMS, which stands for the Organization for Social Media Safety.org, so OFSMS.org, or they can email me at ed@OFSMS.org.
Okay, excellent. Ed, thanks very much once again coming on, enlightening us as to what's happening. I'm always interested in, that kind of information to get out to the public because everybody who has children really knows what you're talking about. Thanks for coming on.
Absolutely, Jeff. Thanks for having me, as always.
No problem. That's Ed Peisner for the Organization for Social Media Safety. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. Pick up the phone, give us a call, leave a message. I'll call you right back. And some of the information that we bring to you on the show is topical and local. But a lot of other times we go other places. Malibu Funding, as you know, has licenses in a number of different states, 10 to be exact. Some of these states I've been doing business since whenever, 2004, maybe even sooner. One of those places, a great place in the state of Georgia. And with us today, once again, is a guest that we've had on many times. And I hope she's up for it. A very energetic and terrific interview is Luana Bradford from the Bradford Group. Luana, how are you today?
I'm doing well, Jeff. How are you?
I'm okay. I know you're not, but thank you for soldiering through this. I wanted to have you on the show because there's so much going on nationally in the housing market, especially since we've had rates, do some fluctuation and now they're down again. And I wanted to get an update of what's happening in Atlanta, down in the metropolitan area and the places you work, and then maybe a little bit about how your business is going and what you're doing.
Sure.
So what is happening in Atlanta? How are the housing prices? What's happening in terms of availability of product for your clients?
Prices are doing great as far as market valuation.
Right.
We continue to steadily increase, which is a good thing because we had tanked so low. So
right.
We're about 5%, between 3.65% increase in prices from last year.
Okay.
And so it's definitely a buyer's market. There's just not enough inventory out there.
Right.
And the prices right now, let's say if you're looking at that first-time home buyer price,
yep,
those are landing around $220.
Now, where is that?
Throughout the metro area.
I see. Okay, and some of the obviously areas that you're looking at, are these new home? These are new home prices, $220 and above.
Yeah. These are new homes. So your average home prices.
Okay, and
with that you're getting.
Go ahead.
I feel like we're getting less land. With that home.
Well, give us an idea.
My brother just recently purchased a home, and not far from his home that he sold. Again, great area, a great community, but less land and less home for more price.
Give us an idea of the size of lot you're talking about, size of house for these kind of prices.
I would say they are a quarter acre, and you're looking at, the kind of homes that you can reach out and catch your neighbor.
Right.
They're putting them so close.
Yeah, no, I know that kind of house, sure. That you're speaking all about California. That's kind of how they build them out here. Yeah, exactly.
Right.
But a quarter acre is a pretty good sized lot, though, isn't it? No? I don't know. Maybe not down there.
Yeah, because, here it's, like my home, I sit on almost an acre.
Oh,
so,
yeah.
For California, yeah, it's great. So when you're looking at Atlanta Metro overall, there's small development. We have really no true geographical boundaries for the growth of Atlanta.
Right.
And now it seems like compared to 20 years ago, we're literally packing houses on top of houses.
Well, you mentioned it earlier in the show. I mean, have you finally come out of recessionary value, meaning that most houses are above water finally?
Yes, definitely. Most houses are above water and are now surpassing the valuation that they were in 2008, 2009.
Well, that's great, because I know that Atlanta's really dragged and lagged behind it, but with the demand and the growth of Atlanta really has, it's like such a different city than it was 10 or 15 years ago, don't you think, in terms of size?
It's getting insane. We are quickly approaching 6 million.
That's a big city. I mean, come on. How many cities are bigger than that? Not too many. Maybe 2, 3. Los Angeles, Chicago, New York, and that's about it. Maybe Philly.
Yeah, that's about it.
Right, exactly. No, Atlanta, and I love Atlanta. As you know, my sister lives down in LaGrange, about an hour south. And as I said, I've been down there as a company. Malibu Funding's been there, I don't know, since 2004, 2005. So we've seen a lot of different changes. Glad to see that it's coming to where it is now. How's your own particular business doing?
We're doing well, but the interesting thing, we're doing better on the investment side than on the homeowner side. And I think right now, last quarter of the fiscal year, and just the buzz about what's going to happen, or is there going to be another burst of the bubble?
Right.
People are a little anxious, wondering, should I buy, should I not? Is it best to stay where I am?
No, I feel that as well. I think based on the readings I'm doing, what we have is a Fed and a Treasury who are doing a kind of phantom QE, i.e. they're pumping money into the market by buying treasuries and mortgage-backed securities like they were previously. And that, coupled with the Fed lowering their own rate, is that to keep the economy going? Or is it just to, I guess, grease the wheels a little bit as we take off for an election year, which is going to be a ride in and of itself?
Exactly, because we know the last thing that you want is during or approaching an election year for things to just spiral out of control.
Right. I'm not.
There's just a lot of speculation and buzz, and obviously, as home buyers, they're listening to what they're hearing on the news and what they're hearing at work, and then they're putting their own spin on it. So
right.
The sky is falling syndrome is out there again.
Yeah, it's so funny. Everybody wants to be the first one to predict the worst thing that's going to happen. And I'm like, I don't know, man. It's very hard because the indicators are lagging. We don't really have a foresight, a crystal ball, whatever you want, a fortune teller to tell us, 6 months, a year down the line, how's the economy going to be? How is everything going to be affected by the process politically? How are things, with the China trade deal? And how is this going to affect my local little market where I'm trying to sell some houses? Now, when you say investment side, are you talking flips or are you talking buy and hold?
Flip and buy and hold. There's more buy and hold though that we're experiencing at the Bradford Group.
I see. And okay, and what's the price point of that? Is these higher end homes or starter homes?
They're averaging around 127 or so.
Mm-hmm.
As far as the buy-in homes, and I'm seeing more duplexes, quads coming into play. Some individuals looking at those, which is actually kind of smart, as owner occupied.
Right.
They're in one part and lease the other.
Yeah, and how are the rents down there? I know that nationally what we talk about is, rents rising, and there's a problem with not enough rentals, and people who bought all the houses up during the recession are not selling them. They're just renting them out, i.e. keeping a real tight control over the inventory. What's it like down there in terms of rentals?
Yeah, definitely. We're experiencing the same with you. Rental rates are ranging from about $1,400 and up.
Is that
for the average? And as you go into the city, within the perimeter of Atlanta, you definitely see an increase.
Right, and that's probably putting a squeeze on, people who are moving into the area, and people moving into the area obviously putting a squeeze on the inventory itself, right?
Yeah.
Okay,
and the other thing that, so let's say if someone is looking who currently has a home and is looking to purchase another home, as I mentioned, with the rising prices and getting less homes, many people are just opting to stay where they are and renovate, do whatever they need to do with their existing property. I have one person who actually, they added another floor to their home. So it was easier for them to do a cash out refi than to go and do a straight purchase.
Hey, could you tell people how to get in touch with a terrific person down there in the Atlanta area to be able to help them with their housing needs, i.e. you?
Sure. They can reach us online at www.bradfordgroupmtg.com. That's bradfordgroupmortgage.com, or 404-618-2824. That's 404-618-2824.
I want to thank you very much. I know that was probably painful to talk this much, but I really appreciate you once again coming on and giving us great information about what's going on down at the ATL.
Thank you so much, Jeff.
Okay, thank you very
much. To you.
Yes, and you too, and have a great holiday season. Thanks very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Well, welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929, our telephone number over here. Our email address is info@malibufunding.net. You can also see us on YouTube. If you go to YouTube, the channel is Jeff Barton, the Mortgage Voice. You see this show as well as many, many others, the Las Vegas Real Estate Show as well. Information is always valuable, right? Especially if you're new to real estate, or even if you're old and you're looking to try to gain an advantage over either a buyer or a seller, get the best deal you can, maybe, have those points that you're paying towards your rate buy down and figure out exactly how you can save money that way. I mean, there's all kinds of formulas and things that you need to know and learn, but most of us haven't got the time or energy because we're busy with life. So you need a terrific loan officer, somebody who can help you do that. One of the best people I know in the business is Luke Mankey from Malibu Funding, and he joins us here today. Luke, how are you?
I'm good, Jeff. Thanks for having me on again. How you doing?
I'm fine, thank you. You sound worn out and tired. You okay?
No, I'm good. I'm just I'm open to a couple days here with the holiday and get quiet days to recharge, but we're doing good.
Okay. The reason I say that is because when rates went down about 4 or 5 months ago, it was like, okay, here we go. We got to do another sprint. If we just did 10 years of sprints, now we're going to do another one, because rates dropped a lot, and then a lot of people wanted to refi out of what they got a year and a half, 2 years ago. How's business for you?
Yeah, it's kind of what you said. It's been real busy. It was just quite a sprint there in July and August. And
right.
Then we kind of hit an interesting patch there where the Fed dropped it a second time, but the rates didn't react to that, and all the lenders were just sat in full banks with applications trying to close them out. And then it seems like this third rate drop here by the Fed is what's now finally sticking, and rates are kind of back down to where they should be. And it's like we had a wave in the summer, and now we've got another wave kind of upon us again right now of people refinancing, whether it's cashing out, do it rate term. It's been good. I mean, rates were pretty good before the drop, and everybody was buying. And
right.
Then everyone that bought last year, now we're getting them into something where we're saving them hundreds of dollars a month, and so it's a win-win.
You do a lot of things for me personally in terms of trying to solve problems for difficult borrowers. Give us an idea of, usually at the end of some of these cycles, you get a lot of difficult deals. Why? Because people are trying to squeeze into something they maybe shouldn't, or they have documentation that isn't quite, what is needed for a spiffy A-paper loan. Give us your idea of how you help these kind of people, and if we're in that type of market now.
Yeah, we're definitely in that market right now. It's been the self-employed borrowers that have kind of gotten the short end of the stick here.
Right.
The past, I don't know, since the middle of the recession, really.
Right.
And now there's just so many more options with bank statements to qualify, 1-year tax returns. Even if they're trying to buy an investment property, we can just do it where it's a debt service coverage ratio calculation that might help them get into it. But even more so on these self-employed borrowers, I tend to find myself dealing with people that they just don't quite qualify, or they're right on the cusp. And so I partner up with their accountants a lot of times, and when they file their draft returns before they're actually logged in with the IRS, I'll work with the accountant. They'll send me the returns. I'll audit them, review them, see what the usable income is, and we might play with a couple things, maybe either bump up depreciation and depletions or reduce some of the deductions to bump up the income so they qualify.
Right.
And that's one of the services. You're not going to get that level of just like dissection, I suppose, for lack of better words, of kind of figuring out, just finding a way. And of course, there's always hard money or some higher rate, but it's nice to be able to put in a little extra work, roll up your sleeves, and get them into a conventional loan that they want with just a little bit of creative thinking. So try to do that. It's a lot of extra work, but that's why they come back to me for send their friends and family and whatever. So,
speaking of that, yes, you do a lot of that, and I know that from personal experience as well as professional experience, getting those people to not only recommend you is the highest praise you can possibly get, and I appreciate that, and I know they do too, because problem solving in the mortgage business, it's not as easy as people think, because you have to think creatively and you have to look at a situation and say, okay, this person is this. And if we present this person in a different way, i.e., like you were saying, maybe we have less deductions, we pump income, or we look at bank statement programs because they have a business that makes a ton of dough, but they don't necessarily declare everything. There is a way by which to present a borrower in the best light for a particular program with a specific lender. And I think that's what you're talking about, right?
Yeah, absolutely. No, spot on. That's exactly it. And it's an exciting time. It's creating more business, and these are good loans for people. It's not like we're putting them in some sort of a subprime or something that's going to, state out what, like, they
a stated pick-a-pay. Yeah, that's what you want to do. A neg-am. Yeah, there you go.
Yeah, I know. No, I stand behind. I think that everything that we're doing, at least that I'm involved with, that I've seen out there, everyone that's getting a loan right now, they can cover it. It's not the wild west and all reckless like it was in 04, 5, 6, whatever.
Yep.
Leading up to that. So,
yeah, it was that way. It really was. And what I hear from some of the loan officers and some of the people who I talk to about this is they're a little bit nervous. They're thinking somehow there's this huge housing bubble, which I don't think there is. How do you feel about that?
Yeah, I don't. I mean, I just kind of keep thinking and saying that I don't. There's so much demand here.
Right.
Just to what I said a minute ago about the majority of these loans, everyone that I'm doing, and granted I can't speak for everyone, but, these are full documentation, whether it's tax returns or bank statements or whatever, they're qualifying for it. And so I don't think that we're making a bunch of exotic, risky loans that are creating a lending bubble. We certainly don't have the appraisers in our back pocket where we can call in a favor.
That's right.
Value up higher.
Right.
So there's that. So, give me the reasons why. I get it, inflated markets like San Fran, New York, and Seattle, and whatever.
Yep.
That got a little bit out of hand, and those are adjusting right now. But I think as a whole, maybe plus or minus 5 or 10%, but not some cliff that we're driving up to. I don't believe that.
No, I don't either. And I just saw an interesting statistic about Seattle, which said that based on current market inventory, the Seattle market is down properties being available for sale 28% from last year. Now that tells you that, okay, wow, the myth that Seattle was somehow in a bubble has disappeared because they don't have enough properties up there to sell, and that's only going to do what? It's going to drive the price of a property higher. It has to, because supply and demand demands it.
Yeah, absolutely.
Now
You hit the nail on the head. Nobody knows for sure, but I wouldn't be apprehensive if the time is right and you want to buy and you want to get in the right properties up and work and employment's there, then by all means pounce.
Well, you do loans in a number of different states, right? Washington being one of them. What's a little bit of a difference between doing a loan down here in California and maybe up there in Washington State?
Gosh, not a lot. I mean, it used to be loan amounts, but boy, what it's done. I mean, I'm from a smaller town, Tacoma, which is like 45 minutes south of Seattle.
Yep.
And Seattle used to be kind of like in LA, but boy, the values and the sales prices and how quickly things are selling. I've done my best friend's loans up there, a handful of them this year. And my sister and her brother-in-law just closed on a place as well. And there's not a whole lot of differences, like the property types, the build, the construction, how quickly they're going in escrow, how quickly they're closing, the loan amounts. It's all almost on par with what we're seeing down here.
Wow, that says something.
But
yeah,
nothing jumps out at me that there's a whole lot of differences per se between the California market and Washington. I mean, a loan is a loan, and
right.
You need somebody to help you navigate through and close it, and so that's where I'm grateful to be able to do that, not just in our state of California, but up there and in a handful of other states as well.
Luke, could you provide a phone number or a way by customers, people who want a great loan officer can get in touch with you to be able to help them?
Sure, thank you. My cell phone, you can reach me at 818-209-2592, and email is luke.malibufunding@yahoo.com.
Luke, as always, ding-a-ling-a-ling, time's up. Thanks very much for coming on again, and again, I appreciate you doing that.
Yes, you're very welcome. Enjoy the holidays, Jeff. Thank you.
Thank you very much. That's Luke Mankey from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, the telephone number. Leave a message. Call you right back. We have a busy show. We have had a number of great guests on the show, and I really appreciate you tuning in and listening in. This weekend, every week, we have K Tahoe, KMET, and KCAA, great radio stations, and those fine people who bring the show to you each and every week. I want to thank them. We are past our holiday, and I hope everybody is not full of it, but I mean full of plenty of turkey and full of, their holiday cheers, about ready to get geared up. I know that there's a tremendous amount of stress when you go to these events. If you haven't seen family in a while, everybody kind of drifts back to their natal state and become, people that they were when they were a lot younger, especially if you've got a real nuclear family together, if there's a father and a mother and 2 or 3 kids and some extended family, it can get very, very stressful. And anybody who's been through it, as I was over Thanksgiving, you know what I'm talking about. And there's nothing like low interest rates to make you feel better if you're buying a house. So if you're out there, that's a terrible segue, but if you are out there and you're looking to buy a house, I'm going to read off some rates here, and the rates have actually remained pretty steady. They were lowered, but they haven't really come any further down, although they are, as I say, in pretty good in perspective. Now, we've been talking about these rates going up or down since 2010, so that's almost 10 years they've been floating down very low, and your ability to go out there and get and afford a home based on this particular statistic is amazing. 30-year fixed rate loan across America averages about 3.75%, all things being equal. That's a smoking rate, folks. If you've got some down payment, 5%, let's say, you could probably get yourself a house. Now, it may not be in the central part of the best neighborhood in town, but if you search around, I want to get to this right away, the new home sales. New home sales are indicative of what people are looking for in the marketplace. New home sales have been at their highest rate in 12 years. that tells you that the demand for new homes is as great as the demand for older homes, pre-sold homes. So why is that important? Well, the real estate industry and the building industry and everything that's ancillary to that is a great indicator of how people feel about the economy today, but also moving forward. So if we have large builders, KB Homes, what are some of the other ones? There's a gazillion of them. Shea Home, Lennar Home, and they're building all over the corridor on the I-15, by the way. I mean, as you know, anybody that's gone up and down and seen the new homes in Hesperia or Hemet or some of these other places, you can attest to the fact that $250,000, $300,000 gets you into the house. So new home sales are indicative of how people feel about the future, about how they're able to afford getting into something new. It's cheaper to buy something older than it is something new. It's just the way it is. Anybody that's bought a new car, you know exactly what I'm talking about. You go in, you buy a brand new car, let's say it's a $30,000 car. 10 minutes after you drive it off the lot, it's worth $25,000. Now, why is that? I don't know. But if you're willing, like a home, to go and pay top dollar for a brand new, it means you're feeling pretty good about the economy. And that's what new home sales tell me. If they're at this 12-year high, and let's see the exact numbers just so that you can get an idea of what I'm talking about. Let's see. The adjusted annual rate, new home sales, 733,000 homes this year will be sold. And the new home sales this time a year ago, the projected year-end sales volume was 557, so that's a huge difference, 733 to 557. It's almost 200,000 more homes, brand new homes being sold. Now, again, the price point to most of these homes, especially in the areas I've mentioned, are in the $200,000 to $300,000 range. In certain other areas, what they call infill deals, i.e., you got a lot in a certain city, and a builder comes in and they want to build 10 or 15 houses. Most of these large new home developments are more in the hundreds, not in the tens or in the single digits. But infill deals are also important out there, and they're also included in these statistics. So if we jump back to what the mortgage rates are, which obviously help anybody who's out there wanting to buy, the FHA and VA loans, 3.375. And I got to tell you, if anybody is out there in, let's say you're turning 65 and you got to get Medicare, okay? Let's say that you want to get health insurance. Open enrollment is right now. Let's say that you want to do anything that is government-oriented and needs to be done online. So the VA in the loan world just came out with a new portal. Anybody who's in the business knows what I'm talking about, but if for you out there, the VA portal, well, first of all, the VA is not an easy navigable kind of situation because it requires a number of different things to be done prior to getting the loan done. The borrower has to get his certificate of eligibility done, and there has to be a certain number of checks and balances through the process that are with a normal loan. However, the new portal for the VA, like a lot of these other things, is complex and difficult. Prior to doing that, you have to sign in, and the identification process in order to sign in is whoa. Anybody who's gotten that new license in California, the one where you got to bring in like 7 pieces of identification to identify who you are, or else you're going to have to bring your passport every time you travel from I guess San Diego to Las Vegas. Nobody's going to want to do that. So I did it, and yes, there was tons and tons of paperwork to bring into the DMV. Now that's, again, the VA is a step above the Department of Motor Vehicles, but not that big a step. I mean, let me tell you, in order to process and get all this bureaucratic work done, just to be able to present you with an offer from the VA is unbelievable. So if you're getting your Medicare card or if you're doing some other online work, I feel for you because, believe me, having to do this for you as borrowers every day, whether it's the VA portal, whether it's the FHA portal, whether it's just pricing a loan, there's a lot of new technologies coming in play and a lot of new portals that we have to abide by, meaning we got to sign up, we got to get the training, and we got to make sure that it happens. We're going through a whole revitalization of our LOS software. LOS means loan origination software, and it's like everything else, it's going mobile and it's going cloud. And so we too are spending a large amount of money over at Malibu Funding in order to get that done. It'll make it more convenient. It'll make it easier for the loan officer to sit down with a customer at a house. And for those that don't have it or don't know what I'm talking about, think Rocket Mortgage. That's exactly what this particular new LOS is like. It means that you can be anywhere and conduct business and get a loan, which is a good thing. Let's get back to the rates. 15-year fixed, 3.375%. The 5-year ARMs at 3.25%. And, of course, we always say it depends on the lender. On the trade war front, it looks like that, or maybe this is just smoke. I don't know. It's hard to tell nowadays because you hear this China deal is going to be done for a long, long time now. I mean, probably 6 months, and that's a long time in the political world, certainly in the economic world, as things evolve and change. But if that does happen, we could see actual GDP jump in the fourth quarter. We are now in late November, December. Yeah, we could see a good holiday season because people will feel really good, especially businesses who will then see the advantage of not having taxes or tariffs and not having to slap that particular margin on their products in order to sell them to you. And that's a direct effect to the bottom line, which really would help around the holiday season, which is already begun. As everybody knows, we usually look forward to the Christmas holiday buying season from Black Friday onward. And I believe Black Friday was a terrific success once again this year, although over 50, maybe even 60% of the items bought on Black Friday are bought online. Think about that for a second. 12, 15 years ago, wouldn't you have liked to buy some Amazon stock? I sure would have, because now I can go out and buy that house I wanted to buy. Me and Jeff Bezos, we could live side by side, don't you think? Anyway, what do you think, Daryl?
Starbucks stock bought my house.
Oh, thank you. Exactly right. Anyway, I'm Jeff Barton. Thanks for listening, and thanks for tuning in each and every week, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.